Bitcoin halving is a buzzword that sparks curiosity and debate among crypto enthusiasts. And as of March 14, 2025, at 11 o'clock p.m. PDT, with Bitcoin BTC trading at $80,996 down from $109.140 in January, per CoinGecko, its latest halving on April 19, 2024, still ripples through the market. So what exactly is it, and does it mean profit or risk for you? This event shapes Bitcoin's economics, influencing its price and investor strategies. So let's unpack its mechanics, historical impact, and what it signals for 2025. Bitcoin halving is a programmed event that slashes the reward miners get for adding new blocks to the blockchain, happening every 210,000 blocks, roughly 4 years. On April 19, 2024, at block 840,000, the reward dropped from 6.25 BTC to 3.125 BTC per block, cutting daily issuance from 900 BTC to 450 BTC. And with 19.79 million of 21 million BTC already mined, this tightens supply, baked into Bitcoin's code by Satoshi Nakamoto to mimic gold scarcity. Miners now earn less. Hash rates briefly dipped 10 post-2024 per blockchain, and the next halving isn't until 2028. So 2025 rides the current cycle's wave. Historically, halvings ignite profit potential. Post-2012, BTC soared from $12 to $1,163 by 2013, 97x. After 2016, it hit $19,666 by 2017, 30x, and post-2020, it reached $69,000 by 2021, 8x. Each bull run peaked 12-18 months later, pointing to July-October 2025 for the next hop, driven by supply shocks and hype. And today, ETF inflows 683,000 BTC in 2024, $55 billion, and Trump's pro-crypto push 1M BTC reserve talk amplify this. X posts and analysts like Bernstein 200,000 BTC hitting 150,000 to 50,000 by Q4, turning a $1,000 by now into $2,500 plus if it doubles. A tantalizing profit shot for hodlers. But risks loom large. Halvings don't guarantee instant gains. BTC dipped 26% from January's $109,000 peak despite 2024's cut, hit by Fed rates at 4.25, 4.50, and yields at 4.55%. And X-Chatter warns of a $75.000 crash if tariffs trumps 25% or recession. Q1 GDP fears spook markets. Past cycles saw 70% plus corrections, for example, $16,000 in 2022. And miners selling to cover costs. Hash rate recovery lags add pressure, so your $1,000 could shrink to $700 mid-year. A stark risk if you're over-leveraged or panic sell. Profit or risk? It's both long-term. Halvings favor profit. DCA $50 weekly into BTC at $80,000 builds 0.0075 BTC by December 1 to 5 at 150K. Banking on scarcity and adoption. ETF assets may hit $190 billion, but short-term volatility bites scalp dips by $80,000. Sell $83,000 with 5% stops of trading, and store it on a ledger. Watch X for FOMO. CPI March 18, and Fed moves. Halving's a slow burn, not a sprint, so weigh your horizon and risk appetite in 2025's wild ride.